If you buy a $60,000 car and write it off, does that mean you got a free $60,000 car? The answer is no. So what is a tax write-off in reality? Let's say you made $100,000 this year and you're balling, and your tax rate, let's say, is 30%. You're gonna owe $30,000 in tax. Nobody wants to pay $30,000 in tax. So what do people do? They buy equipment, cars, or other expenses. Now let's say you bought a $60,000 car and you wrote it off under the business where you've made $100,000. Now your income goes down to $40,000 and you only pay 30% on that $40,000. However, you still spend $60,000 on a car. You're still spending more than you would have if you just paid the tax. So a tax write-off doesn't mean you're getting free stuff or a free car. It just means you're reducing your tax liability. One thing to keep in mind is if you're buying a car or equipment, eventually you're going to depreciate it down to zero. So your basis is going to be zero. And let's say you resell it in the future. Let's say it's a car you bought for 60 and you're selling it for 30 now. You're going to have a gain from 0 to 30,000 that you're going to have to pay tax on for depreciation recapture. So be careful with the advice that you hear online or what you expense in the business, or if you think a car is free and there's going to be no tax.